Alright guys, so the G7 is getting desperate again. I don't know why, but it seems trying to corner the global majority is their part-time hobby. Now of course, talking about Russia and China. And this is something we have said for years. BRICS is rising thanks to the Russia-China alliance. Cheap commodities plus industrial manufacturing is a combination that's unbeatable. So when you can't win the competition, the only card you have left is to punish and contain their economies. Now, I miss the days of analyzing real economics, but since Trump took over, it's all about threats and ultimatums. The German finance minister Klingbeil just announced the agenda, and the amount of fear is palpable. The G7 wants to counter China's industrial overcapacity, its robust supply chain, and Beijing's grip on rare earth minerals. It's more or less the same thing Yellen and Blinken said back in 2024. China is producing too much and they are flooding the world with excess production. So we have to look at this through a lens of fear and envy from the G7. Now, while the West was busy financializing their economies, China was busy building up their real industrial economy. Now, the G7, they are masters of banking, issuing bonds and inventing derivatives. China, on the other hand, were in Africa, Brazil, and Asia developing their supply chains. So when it finally comes to manufacturing, the G7 simply can't compete. China's current account surplus is actually very reasonable at only 2% last year. But because of its sheer size of the economy, the US is very jealous. The Treasury said how China's manufacturing surplus alone is 2% of global GDP. And if this trend continues, it's going to hit 3% or 4% by the end of the decade. And once China catches up with AI chips, it's going to be game over. Their trade surplus will skyrocket to the high heavens. So the G7 has decided to tackle both China and Russia. But is that even feasible? Now, something tells me this is going to be a pipe dream. Klingbeil is trying to diversify his supply chains with South Korea and Australia. They want to depend less on China for their inputs, especially in rare earths, but that is just impossible. The EU today is being starved of rare earths, and this is a big problem. Imports of rare earths have been dropping, and in 2024, their supply crashed by over 20% compared to 2023. And this means less industrial capabilities, less manufactured products, and of course, a higher overall cost of making stuff. And this goes beyond just higher energy costs. There are some commodities in the world that are simply irreplaceable. Now, you can swap away oil for LNG. You can install solar panels instead of nuclear plants, but if rare earths are gone, how are you going to replace them? Now, Europe is basically caught in a trade war between the US and China, and their entire bloc is collateral damage. They are facing high tariff barriers from Trump, so they have to find other markets to sell to. But major EU exports, especially from Germany, need rare earths that only China can provide. And in this economic war, Beijing has all the leverage. In May, rare earth shipments to the EU from China fell by incredible 81%. So you can imagine the amount of disruption this can do for EU industries. Making cars is more expensive. Making semiconductors will be near impossible. Electronics and machinery all cost more to make now. And as a result, exporting stuff to the world is quite impossible. So the EU is caught in a doom loop where they can't sell to the US, they can't export to the world, and they are forced to import more from China. And this can't go on forever. Now, I want to be clear, this is not China, Russia, or even Trump's fault. It's Europe's own fault by conducting such a mindless foreign policy. They punished their neighbors to curry favor with Washington, and then Joe Biden left, and we know what's going on today. The EU is too idealistic when the rest of the world, including the Americans, are extremely pragmatic. And we are watching the EU pay the price in real time. Now, this chart is the real wake up call. When it comes to rare earths, BRICS and its trading partners dominate more or less everything. In 2024, the EU imported 13,000 tons. China accounted for 46% of total imports, while Russia came in at 28% of rare earths. So, three quarters are from countries that the EU is against or just outright sanctioned. So Europe has to scramble to their remaining suppliers like Malaysia and Japan for supply. But because you are squeezing 3 times the demand, prices have to fly up. And that's if you can even get the supply. And this brings about enormous problems, especially in modern technologies. Firstly, the Americans are not going to shift their plants to Europe. Trump is looking to reshore everything and not friendshore. Sooner or later, China will start taking over what's left of Europe's car industry. Plus, when Chinese semiconductors catch up with the US, they will flood the world with affordable chips. China's trade surplus with Europe is rising once again. Now, we are back above $22 billion as a whole, but focus a bit on Germany here. Since 2022, the Germans are now importing more from the Chinese than what they sell. The German industrial machine is broken. They are behind China's industries. And this is despite tariffs on Chinese EVs and other exports. Now, the solution to this is actually quite simple. Stop antagonizing China, Russia, and BRICS as a whole. There has to be sweeping reforms that focus more on pragmatism instead of idealism. Now, the fastest way out of this is to restore trade with Russia, isn't it? They are just next door and they have everything that you desperately need. They have oil and gas, cheap LNG, cheap metals, and huge reserves of rare earths. But Europe is still hell bent on punishing Putin. We have seen literally 3 years of this failed strategy. But the EU is still going to march forward with this inane plan. The Commission just adopted the 18th package of sanctions against Russia. Yes, you heard it right, number 18. And these measures are going to hit Russia's energy, banking, and military sectors, basically to shut down Putin's revenue sources and prevent Moscow from trading with the rest of the world. There are two main hits that Europe is trying to impose on Russia, and it looks good on paper, doesn't it? A sort of financial pincer movement to prevent the Russians from moving around in the global economy. But you quickly realize all these are quite useless. There's a big reason why Peskov is laughing this off because Russia is more or less sanction proofed from the West. And according to him, each new sanctions package brings a negative effect for the countries that back it. This is a double edged weapon. And he's right. Russia has built up immunity to Western sanctions. It's a big reason why the US has given up on their end. But the EU isn't giving up yet, and let's go through them. The EU is going to lower the price cap for Russian crude from $60 to 48, so it's another 20% down. And the plan is to reduce oil revenues from the world to Russia. But here's the truth. China will still be buying Russian oil. India won't be stopping. Even Japan is starting to resume Russian oil imports. Demand will still be high, so don't expect a price collapse here. And trying to sanction a shadow fleet is also a problem. Russia has a ton of vessels, there are also Chinese vessels. Not forgetting the margins for transporting Russian crude is just too lucrative. This won't work. For every Western ship that refuses to carry Russian cargo, there'll be two or three laying in wait. It's a self-defeating exercise that will just hammer Western shipping companies. In addition to clamping down on Russian energy, Europe also wants to knock out Russia's banking sector. And the next set of measures look really nasty, but we just need to peel away at the top layer and you realize it's really a non-event. The EU is going to ban 22 additional Russian banks, and this brings the tally to 45 in total. European financial institutions and companies won't be able to do any transactions with them. In addition, Europe wants to punish third country banks from using Russia's financial messaging system, the SPFS, basically a form of secondary sanctions. And here's why both these tactics won't work. The majority of Russian trade goes through Chinese banks, and realistically, there's no way for Europe to shut down banks in China. Imagine the devastation if banks like ICBC or Bank of China gets cut away. EU-China trade will literally collapse. Russia also uses the Chinese messaging system SIPs as a bypass. Trying to clamp that down also isn't possible. So all these sanction packages are just performative at best, and unless the G7 takes down China, Russia is actually quite untouchable. But let's end this with something a little funny. Now, by now we know the dollar's in trouble. There are too many negatives than positives that's pushing down its value. Now, the trade war is a big one. The 3.4 trillion tax bill is another. China also dropping their holdings by nearly $1 billion is a problem as well. And the fear of confiscation still looms, especially what happened to Russia. Now, foreign investors today hold around 31% of US Treasury market, And this is the latest update and is a far cry from the 2008 levels. And back then, foreign holdings were impressive, 56.5%. So what changed? Endless money printing plus the threat of confiscation, especially in 2022. And all this have not fundamentally changed. Investors they hold on to treasuries to preserve their capital. And this is what a reserve asset is all about, or should be all about. But when you try to burst your budget and play games with the Federal Reserve, you undermine the very foundations of stability. And remember that in July to September this year, the Treasury is expected to borrow over $550 billion from global investors. And it's not even adding the additional $340 billion from the tax bill. So dollar strength is still being weighed down from all this excessive borrowing. And once again, I have to repeat this fact. Productivity and growth is not guaranteed. But what is guaranteed is a bigger debt burden at higher interest rates. So let that sink in for a bit. And this is something we all understand, but for Trump, it still looks like everything is peachy.
They didn't want to be tariffed, did they, Howard? Huh? So it's amazing. No, we're not going to let the dollar slide. If we have a smart president, you're never going to let the dollar slide. If you have a dummy, that could happen. Like the last one, he would, if you ever asked him about the dollar sliding, he would have no idea. But we can't let that ever happen again.
You know, I gotta give it to Trump, right? He has this reality distortion feel. Sometimes he even gets me to question my version of reality. Maybe Trump knows something that we don't. Maybe there's some grand master plan he's sketching on the blackboard daily with Scott Besson. But thankfully, we have charts to show us the truth of the matter. And yes, the dollar's down by over 9% year to date. So for foreign holders of US bonds, it's still a net negative. And that's before factoring in US inflation, which is still way above 2%. Now, I find it very useful to really focus on a budget deficit because it tells us everything we need to know about the US economy, especially when it comes to the dollar strength and how the trade war is going. Eventually, if you're Trump, you want to see the deficit drop. That's the end game, right? You want to balance the books, and that is the best way to convince investors that the dollar will recover. Now, the deficit today is now at $1.4 trillion, and we still have 4 more months left to go. By all estimates, it will end higher than in 2024, might even hit past $2 trillion as well. So, if we want an indicator of true economic growth in the US, we need to watch both the GDP growth and the deficit. Now, if GDP continues to grow and the deficit starts to collapse, then maybe we can say we turned the corner. However, we are still not seeing it today. But let me know what you think. Will China and Russia fold to the G7? And is Trump really oblivious to the dollar? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.